Hi, folks. Dan Bird here with the daily scan for January the 10th, Friday. Hope everyone's ready for a great weekend. Looks like the market is rolling over now. Jobs number was really good. Frankly, it was a great number. So it's a case of good news is bad news for the market. The Usually the market likes a nice, strong jobs number. That's how it came in. But this time it means that the Fed probably is not going to cut, which I've been saying that they're not going to cut anyway. I don't think they want to cut for the whole year if they can get away with it, but I don't think that'll be the case. However, right now, they have no reason to cut. And we have the CPI inflation number coming out next Wednesday, which I think is going to come in at least equal to last month or maybe even a little bit hotter. So that might be another reason for the market to continue to go lower. I said yesterday or the day before about the jobs number that I thought the unemployment rate would come in a little bit lower. It was 4.2. It was forecast to come in at 4.2. I thought it might come in at 4.1, and that's exactly what it came in at, 4.1. And I showed that on the video a couple of days ago. I actually showed the jobs information, the data, where the data came from. So good news. The job market is still pretty strong. The economy still looks pretty strong, but the market doesn't like it because they want the Fed to keep cutting, but it doesn't look like they will. So let's take a look at where we are. First off, I am not a financial planner or advisor. I am not giving recommendations on things to buy or sell. You have to understand your own risk profile and trading style and take responsibility for your own trades. And if you do decide to engage with a financial advisor, I recommend you check them out on this website here. Past performance does not guarantee future results, of course. So let's first take a look at the homepage. And the first thing you'll notice is that the trend, the total market trend now is red. So our stoplight is red right now. We have a short-term and a medium-term bear signal. Long-term is still bull, but the short and the medium are now switched to bear. So be careful. It's starting to head lower right now. The market bias chart actually went sideways, so it didn't really go down much today. There were a couple of things that went down, but not too much. So it's just going sideways. If we look at the S&P right here, you can see it's now into the gap. So this gap back here, it's not quite filled it yet, but it's into the gap right now. And in fact, if I take this downtrend line that it's been respecting pretty well, and I duplicate it, and then I just move it down to this level right here, you can see that's the channel that we're in. So typically, it may bounce back to the top of this channel next week, which would put it right below the 50-day moving average. But that doesn't mean it has to. Of course, it could drop through it. And if it drops through it, then we're probably headed down here to 56.50. I said 58.50 was the key level. We're at 58.27, so a little bit below it right now. Looked like it tried to rally in the middle of the day, but failed at the end of the day. So we'll take a look at that in a minute. We'll look at Bitcoin, of course. Bitcoin actually rallied today with the reverse of the rest of the market. So it started coming back up. So that's good for Bitcoin, but you can see it's right at the 92,000 is the key level. The low today was 92.2. It ended at 94.6. So it went down, hit that solid support level, and then bounced off of it and started going back up. But still pretty weak right now. So went up on pretty good volume. That's good news. So maybe there are buyers coming back in. We'll see. But that's the level to watch between 89 and 92,000. That is the level to watch right now. If it drops through that, then we're probably headed down to 77, 75, somewhere in that area. Okay, let's take a look at the market bias matrix. And you'll see lots more red. There's red up here at the top. If we look at on this one, we can look at the S&P also, and you can see the channel that it's in. It touched the bottom of this almost perfectly. So again, typically it will bounce back up, maybe back to the 50-day. We got a medium-term down signal today as well. But if it falls through that, then it will close this gap down here. So we'll have to keep an eye on that one. Bitcoin also down here at the bottom. You can check out the status of Bitcoin. It looks pretty good, actually. Bounced back up with better than average volume today. So that was strong. Bitcoin actually did not follow the rest of the market. If we look at the NASDAQ 100, also dropped through the 50-day. So that's very weak for the NASDAQ 100. It has basically a similar channel line as what I showed before. If I annotate this and use a trend line and just draw a line across the tops right here. So it's been respecting that pretty well. That line right there. And then duplicate it and drag it down to the bottom, the same angle. Right about there, you can see that's the channel. So this is lower lows and lower highs, like I talked about yesterday. That's what makes a downtrend. So to put in another lower low would be the bottom of the channel. Then it bounces up, makes another lower high, would be the top of the channel. Eventually, it's going to break out one way or the other. If it breaks to the downside, that will be very bearish. But it could also break to the upside, which will be resume the bullish trend. But we'll see. We'll keep checking in on that. I'll look at the sectors here in a minute. We can look at semiconductors right here. This is in a sideways channel, and it's just sitting right on its 50-day moving average. So this is where NVIDIA is. I'm going to look at the Magnificent Seven in a minute. As you saw on my splash screen, Magnificent Seven are sitting right on the edge. They've been holding the market up. So we're going to look at those to see if they're ready to start to tip over soon. Oil and gas are the ones that are still bullish. You can see how much green there is in here. So you can see oil gapped up and continued higher today. So that creates bullishness here, but we don't really want oil and gas to go up. Gasoline is actually sitting, just going a little bit sideways right now. So that could affect the overall market as well. Bonds are doing terrible, continuing to go lower right there. So bonds are definitely not the place to be right now. So let's take a look now. First off, let me close these tabs. Oops. Didn't mean to close them all, but let's take a look at, again, we'll go to charts and tools and the relative rotation graphs that I looked at yesterday. And we'll set this up for a daily 3-month. We'll look at the sectors again, and we'll remove all but the aggressive and the defensive sectors like that, and add in the NASDAQ, and we'll add in the small caps. Now, if you'll remember yesterday, why don't you take this back to the beginning of the week? So let's go back to December 31st, beginning of the year. So you can see all the aggressive ones are moving out of the leading quadrant. They're moving down into weakening. They are still outperforming the S&P because they're on the right side of the line. And the defensive sectors are on the left over here. So let's move forward slowly to today. And let's put arrows on this just to give you a sense of direction. All right, so here's January 2nd right here. You can watch, see what the defensive ones and the aggressive ones are doing. Here's January 3rd. Defensive is starting to move higher. Aggressive is starting to move lower. Here's January 6th. Still continuing. January 7th. January 8th right there. And then today, so that was Wednesday. So you can clearly see that the defensive ones are moving up. Even staples are starting to move higher, and all of the aggressive ones are continuing to move down towards the lower left. So let's take a look at what happened today. There's today. So again, all the defensive are continuing to move over here into this right-hand quadrant. If that continues, especially into next week, then that is a clear sign of rotation. Wall Street's moving out of aggressive areas, moving into defensive areas in preparation for a downtrend. So that's the way it's looking right now. Now this could change, it could reverse, but right now all the aggressive ones are heading to the lower left and all the defensives are heading to the upper right. So we'll have to continue to keep an eye on that. Let's go back to the Breakpoint site again. We'll go to the charts page, and I want to show you the 10-minute chart to show you what happened with the market today. So we'll look at the aggressive sectors. The 10-minute chart right here, this vertical blue line is Monday's open. And you can see we were above the previous week's open for the first day. We went below it the second day. And then Wednesday, we just kind of went sideways. And then today pretty much fell apart. So here's a little rally that tried to make right here in the middle of the day and failed right there at 2 o'clock. And from 2 o'clock on, it continued to go lower. Now, what I want you to notice, this has all of the aggressive sectors below the S&P. So technology and this vertical red line here is Monday's open. So technology is lower, financials are lower, discretionary is pretty much flat. Communication services is flat. Industrials was the only real gainer out of the aggressive sectors today. But let's now look at the defensive sectors. Now you can see clearly that they are all gaining. So this kind of goes in conjunction with that relative rotation graph. And you can see this every day. This is a 10-minute chart. So every day these things will update. And you can see how we do as we go through the week. So healthcare is doing well. Staples is flat. Energy is doing well. Utilities is higher than the open. And materials is higher. So all of the defensive sectors look much better than the aggressive sectors. Again, indicates rotation out of aggressive and into safe havens. We can also look here at, on this link. This is on the charts page on this business cycles and sectors. You can also see the sectors. This is a 4-month view, and this is these are relative charts. So it basically is starting all of these at the 4-month period. So on the left-hand side, you've got discretionary, communication services, technology, financials, and industrials. And you can see where they peaked right here in December, about the middle of December. All of these peaked, and since then, they've all been trending lower. The defensive sectors also are trending lower as well. And by the way, these are all still above the S&P, so still outperforming the S&P, except for industrials. On the right-hand side are the defensive sectors, and they are also moving lower, except for energy. Energy is the only one out of all of these that is moving higher, but everything is moving lower. So the whole market right now is declining, essentially. Okay, and one last thing, I want to look at the VIX over here on, let me make this a little smaller again. On the left-hand side of the charts page, we have the VIX down here. So you can see right now the VIX actually ended at 19.5. Anything over 20, the bears are in control, and that's the way it's headed. So it's heading towards that. You can see right here, the S&P is in gray in the background. There's that downtrend line right there. Here's the line across here, which is essentially 58.50, and it broke through that, broke out to the downside on that today. And you can see the 12-month rate of change for the VIX is starting to spike higher. So all of these are indicating that the market is probably it's probably already started its trend to the downside. And we have the inflation number coming in on Wednesday, and the market may not like that either. So we may be in for a extended downtrend here soon. If that happens, of course, on the portfolios page, as I showed yesterday, this has all been updated right now. The long-term trend is still bullish, although it gave an early bear signal right here. And the daily also has an early bear, and it's got a short-term bear too. So the short-term is in cash, even though the long-term is still long as of November of 23. But if this continues, if the market continues to go south, then we can start looking at the inverse ETFs, which are right down here. So the 3X for the NASDAQ is SQQQ, and it shows you what the chart is. And there's the channel for this one. So this, many times in a channel like this, it could go reverse, go back to the bottom. So we want to see if that's going to break out of that channel. It's now above the 50-day moving average. So everything's lining up to make an entry. There's actually an entry right here, potentially short-term entry. But so we are in a secular bull market. So it's really hard to short during a secular bull market because the market can turn around and start to go higher at any time. But it's beginning to look like if this breaks out here and gets into the cloud, then I think everything else is set up to perhaps make an entry, especially if this pulls back. If this pulls back Monday or Tuesday, meaning the market goes higher the first 2 days, then I might even get into this when it pulls back here to the 21-day. We'll keep an eye on it. I'd rather see it pull back and get in rather than trying to get in on a breakout because it could reverse quickly. Although based on the inflation report, I have a feeling it's going to continue to go higher. All right, so that's what the VIX looks like. Not too great. The last thing I want to show you is the Magnificent Seven. And to do this, I am going to go to the Magnificent Trend Models. So I have trend models for the indexes, the sectors, and the Magnificent Seven. These have all been updated today, and they're usually updated every night. So it essentially shows you the Magnificent Seven plus a few extras, shows you the short-term, medium-term, and long-term trend, whether it's up or down, and the date that it changed. So you can see anything that's highlighted like this has changed today, this week, actually. So sometime this week, these have changed. Most of them are red. You can see there's a couple of green ones. Eli Lilly just got an short-term up today. Meta got a short-term up earlier in the week, but the other ones are down signals for short-term, and then the medium-term and long-term. But what I'm going to do is to go through each of these successively, and these buttons here on the side, you can click on the name itself, and it will show you where the actual short and long and medium-term signals are. Those aren't really meant for trading necessarily. They're just meant for informational purposes, just to see when those signals hit. So the short term is when the 5-day crosses the 21. The medium term is when the 21 crosses the 50. And the long term is when the 50 crosses the 200, which isn't even on this chart. So that's what the middle one is. The left-hand side is a weekly chart. So it's a zoom out feature. So you can zoom out and see on a weekly chart. The entry would be way back here in 23, and it still has not given a signal, although it does have a red bar today, but it hasn't gone down below. So it's still okay. This is NVIDIA, by the way. Still okay, but we have to continue to watch it. That's the long term. And then the monthly, if you want to look at the monthly for NVIDIA, it's still pretty bullish. Still definitely higher. It's got a bit of a crossover right there, but it's above zero. So definitely still in that very long-term monthly uptrend, and really hasn't even crossed below the 50 right here. So you could have got in back here when these lines crossed back in 2014 and just stayed in it for forever, essentially. This also has the earnings on here. So if you we'll stick with NVIDIA. So if I click on this earnings button, it will take you over to Earnings Whispers, and it will tell you what's happened the last time, tell you what the whisper is, when the earnings date is. This one has a February 19th date, and consensus is 79 cents and revenue 37 billion. That's for the fourth quarter. So that's the earnings whisper. So that's what that button does. But what I'm going to do is to focus on this right-hand button, which is a zoom in feature. I'm going to go through each of the Magnificent Seven, and you will get a sense for what they look like. Now, remember, the reason I'm doing this is because the Magnificent Seven, these big cap tech stocks, have been propping up the market for quite a long time, sometimes almost exclusively. So if they start to break down, then the whole market is in trouble. So here's Google. Google is actually on our daily scan list. Even still, it's just going sideways right now. So remember what I showed you before. I can actually bring it up again. And just as a refresher, when I showed you what the market market cycles are. There's the markup phase, distribution phase at the top where it goes up and down, or basically in a sideways channel. And then when it breaks through that channel, we have the markdown phase. So Google might be in that distribution phase right now. So here's the markup, and this could be the distribution phase going sideways. All right, there's Google, there's Amazon, there's the distribution. It looks like it's breaking below that channel line now. So it now, and I will put these arrows on here to indicate a buy or sell signal where I think there might be a buy or sell. Right now, Amazon has a sell signal. Here's Apple. Apple definitely has a sell signal continuing to go lower. It already has a short-term down signal. The momentum is crossing below zero, which confirms a downtrend. And the ADX line gave a sell signal back here. So Apple for sure is breaking down. Meta actually looks pretty good, but it could be in that sideways channel at the top of its markup phase. Microsoft definitely breaking down. It may give a medium-term down signal soon as well. You can see where the red crossed the green down here. And this was the sell signal back here. There's Meta, here's NVIDIA, which we just looked at. And this also, you can see, has that same sideways channel at the top. I'll just draw that in right up here, and you'll be able to see it pretty clearly. So there is the distribution phase for NVIDIA. It's still in that distribution, so it hasn't broken below the lower support level yet, but it is in the cloud and about to break below that. And the red has just crossed the green above 25. So those are all bearish signals. And the momentum has been below zero, pulled back above it a little bit right there, but starting to head back towards it. So NVIDIA doesn't look great. Tesla is starting its downtrend right now. There's the sell signal, not below zero yet, but heading there. Here's Netflix, also started its downtrend. It's got a short-term down signal right there. Now it's below the 50-day moving average, below the zero line right there. You can see the ADX crossed over right back here where this red arrow, where that was the sell point to get out of Netflix. So it's starting to downtrend. AMD, which has been awful, got a sell signal way back here and actually broke below its critical support level. So it's actually heading even lower than it had been. Here's SMCI, just kind of hanging right around the 50-day moving average, sort of going sideways, but below zero for momentum. Oracle broke down back here. That was the get out signal right there. You can see where the red crossed the green down here, and Oracle has just continued to go down. It got a medium-term down signal right there and broke the support line a couple of days ago, and now it's probably headed to the 200-day. So Oracle is heading lower. Palantir starting to break down. Palantir got a short-term down signal right there, got the sell signal there. The red crossed the green down here. Has not gone below zero yet, but it's heading there. So it's sitting right on its 50-day moving average. This is where it needs to recover. If it breaks below that and closes below that, then it's probably headed lower as well. Now, Arista Networks actually is still hanging in there, but it might be in its distribution phase too, sitting right up here near its highs. Broadcom starting to break down. There's its distribution phase after a big gap up. So it's kind of like going sideways after that gap up. It's got a bearish early signal right there, and it hasn't really crossed yet. So it's still okay, but it might follow the rest of them down. And Lilly, which actually gave a short-term up signal today and had a green bar today, but it's still in a consolidation phase near the bottom. Things look like they're trying to recover. It's above all of its moving averages, except for the 200, which is good. And it's in the cloud, which is neutral. So to really prove itself, it needs to get above the cloud and above the 200-day, which is the 200 is 837 roughly. All right, so that's all of the Magnificent Seven, as you can see, and as I pointed out at the beginning of this, the Magnificent Seven could be about to tip over. The jobs numbers didn't help when we have inflation coming up next week. So it may be about to tip the whole market over as we head into next week. So be careful out there. Have your stops in place. Tighten up your stops. I'm not saying go to cash, but you could if you felt the desire to. But certainly be more cautious and protect your profits. Don't let things get out of hand and not have any stops. Even if you take a small loss now, it's a lot better than taking a big loss later. So that's it for today. Good luck, and I will have a great weekend, and I will talk to you again on Monday. And by the way, if everyone could subscribe, or anyone that hasn't, please subscribe. Also, send me any comments or anything you want me to look at. I'd be happy to take a look at certain stocks, and let me know what you think. But please subscribe and like if you want me to continue with the channel. I'd like to get over 700, which is pretty close. Last time I looked, I think it was 692. So let's see if we can push it over 700. All right. Thanks, everyone. I appreciate your support, and I will talk to you Monday. Take care.